Hi, everyone. How are you? Thank you for coming, and hope you're having a good Web Summit and a good afternoon. It's nice to see so many people still out and not, having coffees to stay awake at this point in the afternoon. I wanted to share with you some things, I guess a little bit about us, but also a little bit about what's been going on in Web3, because obviously one of the things that we are known for at Animoca Brands is being a reasonably active and large player in the Web3 space. And as we all know, a lot of the discussion over the last year and a half, 2 years, has been about AI. So I wanted to explore for a few minutes with you today how it is that the world of AI and the world of Web3 actually are quite synergistic, and there's a lot of interesting areas in which these things can overlap. So the theme of my talk today is Web3 and AI. First, a little bit about us. As I mentioned, we are essentially what I would call a Web3 conglomerate. There are 3 aspects to our business. We have our digital asset advisory business, where we essentially help companies to tokenize, to bring them into the world of Web3. We have our Web3 business building. We're known for things like building games, building regulated financial products like the Hong Kong dollar stablecoin, et cetera, et cetera. So this is business building within Web3. And then the last pillar, which is actually the pillar where I personally spend my time, is the asset management business. And this is our investing practice, where we invest both off the balance sheet, through accelerators, and through the Animoca Ventures venture capital fund that we manage as well. So all of these 3 pillars work synergistically across the Web3 ecosystem, and I think give us quite a good lens on what's happening in Web3 throughout the industry, as well as around the world. Now, something happened last year. We were very used to, in the Web3 business, being kind of, the hot chick, so to speak, of the technology world. And then AI came along and disrupted everything. All of a sudden, AI was the shiny new thing that everybody wanted to see. And for us, I think we initially were surprised by how much interest there was in what was going on in AI. And AI started to suck a lot of the capital out of the venture community that was before going into Web3 and other diverse technologies. And the entire tech industry started to pivot towards putting money into AI. It became the story, right? And for good reason, because AI is one of those technologies that has the ability to be completely transformative across industries, just like Web3. And so we thought we would explore this a little bit more. And what was behind this huge, push into AI? And it was about the approach. The approach was build GPUs, build these LLMs as large as possible, because this spending arms race was essentially going to build a moat to competition. So we've seen incredible spending over the last, literally just this month. There was $1 trillion of investment into AI announced, right? Which is crazy. I was putting this slide together, and I actually wrote out $1 trillion, just because if you write it in letters, you don't get the full feel of it. But look at how many zeros. It's an incredible amount of money. And that's mostly going into AI investment just this year, because the big tech companies are putting about $320 billion in, right? And then France has announced another $130 billion, and then Saudi has just announced another $15 billion at Leap last week or 2 weeks ago. Even if you exclude the $500 billion announced by Starlink in the US. So a huge amount of money being poured into AI. All of this mostly going into seeking more processing power. But then along comes DeepSeek, right? So several weeks ago, we had this, what we call DeepSeek moment. And all of a sudden, a new model with a new style came out of nowhere and essentially said to us, hey, actually, spending all this money on GPUs may not be the best way to do things, right? Because spending all this money in this arms race may be a very expensive way to get to the solution, but DeepSeek has shown us that actually there are perhaps other ways we can reason ourselves to the same goal. And as a result, we saw a massive crash in the stock market. 2 Mondays ago, $1 trillion was wiped out of the financial markets, half of that just in the stock share price of NVIDIA, the largest single-day loss of value in the history of any company in history. And so I think that this shows you that there is also the ability to have constant disruption, and that what DeepSeek points to is that the idea of open source models is actually a viable future. Not necessarily the arms race to building these closed proprietary models. And this is where we come in with blockchain. Because when you think about what blockchain is very good at, it actually solves some of the problems of what we think about in terms of AI today. I'm sure many of you, if not everyone, uses AI tools, right? All my searching and research and everything on the internet now completely AI, right? But the problem with AI is I still don't quite trust it, right? It gives me back the results, it sounds really good, but there is this nagging doubt in my head because I know that these models are not perfect yet. I know that sometimes they hallucinate, and in particular, certain types of models are prone to hallucination, right? And this is, for me, as a sort of a power user, I'm aware of these issues, but not everybody is. So how do we provide that layer of trust? Well, in fact, we have blockchain, which is trustless technology. It allows us to provide validation of the accuracy of things, the origination of things. So fundamentally, that means that AI and blockchain are complementary technologies because all of that wonderful logic that AI works out, blockchain can provide the audit trail and the verification of trust of how the AI arrives at its outcome. Now, this chart you can actually download from the Linux website. So the Linux Foundation came up with this, and I think it's very useful. It's a picture, a framework of what the tech stack of the world can look like in the event that we focus on open source and decentralized models. And I think that this is very exciting when you think about the impact of Web3 decentralized technology on what's being built in AI as well. Because essentially, we can have decentralized federated learning for our LLMs. We can have decentralized file storage, decentralized identity systems to verify identities. We can have decentralized transactions and financial marketplaces. So this, I think, is a fantastic convergence of the learnings that we've had in the Web3 community and what's been happening in AI. So now to look at it from the other lens of the telescope. We talked about infrastructure, we talked about decentralization. Now let's talk about the consumer experience. So the consumer experience in Web3 has been a challenge. One of the common things that I hear, one of the common complaints as somebody in the Web3 community is, from people who are not that active in Web3, they're like, oh, I've tried it. It's really difficult, right? The user onboarding is not great. In Web2, you have the world's most incredible user onboarding for a software product because most of us have already given our personal information to one of several large tech companies sometime in the last 10 or 15 years. So you can have an experience like this on SoundCloud, where you can go download the app, and in 2 clicks, you can join. Because you probably already have a Google account, or a Facebook account, or an Apple account, or some other OAuth authenticated account. So because you signed up for those services a long time ago, you don't have to go through the hassle of signing up for them again, right? And the problem that we have in Web3 is that typically this is what our onboarding looks like in Web3. Because in Web3, it's different. You have self-custody of assets, you have self-sovereignty, you have ownership, you have all of this control over what happens in your transaction, and there is a cost to that. And the cost is complexity. The cost is user unfriendliness, right? And so what happens is that a lot of Web2 users see this immediately and they get turned off. They're like, look, this is just too hard. I can't be bothered. There are 9 steps to do this and I don't understand it. I'm confused. And so this is not great for the user onboarding process. So I think what solves this actually, again, is AI. So agentic AI is actually fascinating because as we can now create AI agents, the AI agents will become our user interface. This will happen across the web, not just in Web3, but particularly in Web3, I think it solves this user onboarding issue because essentially what it means is that you can tell the AI agent, look, I want to go and sign up to play this game. I want you to buy the tokens for this game, sign me up to the Discord, and join the Facebook group. And the AI agent will go do those things for you. You don't need to figure out how the interface works. You don't need to figure out which tokens to use. It'll just do it for you. But the important thing is that that AI agent must be empowered with something to spend. Because otherwise, if it doesn't have a wallet and it doesn't have anything to spend, it actually has limited utility for you. It can go and fill out a form for you or something else, but actually what you want it to do is you want it to go and execute transactions on your behalf. And the problem with your AI agent is it's not going to go down to the bank and withdraw cash for you because it can't do that. So ultimately what that means is that means that crypto is going to be the native currency of AI. Because AI agents will need to have blockchain-enabled wallets and tokens in order to go out there and spend on your behalf in cyberspace, to use an old-fashioned term. And so I think this is, again, where we see this Venn diagram of AI and Web3 coming together to complement each other and make each other better. To talk a little bit about transactions, this is just for those of you who are not so familiar with what's been going on in the Web3 space. Just so you know, actually these numbers are from 2023. Apologies, I don't have anything from 24 yet. But it's quite amazing. Already the transaction volume in 2023 of stablecoins equals the amount of transactions for all of Visa and MasterCard and PayPal combined. And that comes from an installed user base of 200 million people. Whereas credit cards, there's about 6 billion in existence. So this tells you that there is already incredible market demand for these digital transactions being conducted in stablecoins, despite the fact that there has been limited distribution historically. And on top of that, some incredible businesses have been built. This has not so much to do with my presentation, but I couldn't resist showing this slide because the numbers are so amazing. For those of you who are familiar with a company called Tether, they're the leading stablecoin provider. Tether is the biggest company in the world that, in terms of revenue per employee, they generate $62 million per employee of revenue, or 20 times Google, if you want to think of it that way, 20 times Apple, right? So it's an incredible business. And so we find that we see product market fit for things like this, and these stable coins, as I said, are going to be one of many of the mediums of transaction of AI. So what I'm going to leave you with is quickly a demonstration, because I'm running out of time. This is our portfolio of companies, and how are we implementing this agentic AI? Because we've invested in so many companies, we decided to feed all that information into our own proprietary LLM, which is based on federated learning. And then we use that LLM essentially to filter deal flow and analyze deal flow automatically and help us to be professional investors through those AI tools. If you go to heyannie.xyz, you can take a look at it yourself. And thank you very much.